Is a massive economic crisis about to hit in 2026? You've probably seen the headlines and the viral videos. They paint a scary picture of a global collapse, a market meltdown, something even worse than 2008. But is this real, or is it just another case of social media blowing things out of proportion? Today we're going to cut through the noise and look at what the experts are actually saying. We'll break down the reports from the IMF, the World Bank, and the big financial institutions to find out what's really going on with the global economy. The answer is a lot more complicated and a lot more interesting than a simple yes or no. So, let's start with the big question. Are we headed for a guaranteed global collapse in 2026? The short answer is no. Not a single major institution, from the International Monetary Fund to the OECD, is predicting a definite global crisis. Their official forecasts show that the world economy is expected to continue growing, just at a slower pace than we're used to. They're talking about a slowdown, not a shutdown. So why all the panic? Well, that's where things get tricky. While the baseline forecast is slow and steady growth, these same institutions are raising some serious red flags. They're pointing to a growing list of risks that are making the global economy incredibly vulnerable. What are these risks? First, there's the mountain of debt. Governments, corporations, and even households around the world have borrowed huge amounts of money, especially since 2020. High debt levels make economies fragile. If interest rates stay high or growth slows down too much, it becomes harder to pay back that debt, which can trigger defaults and financial instability. Then there's inflation. We've all felt it at the grocery store and the gas pump. Central banks have been raising interest rates to fight it, but inflation has proven to be stubborn. If it stays high, central banks might have to keep interest rates elevated for longer, which can choke off economic growth and push weaker economies into a recession. This is a delicate balancing act, and there's a real risk of getting it wrong. Next up, we have trade tensions and geopolitical conflicts. We're seeing more and more countries putting up trade barriers and getting into disputes. Think about the ongoing trade friction between major economies. This disrupts global supply chains, makes goods more expensive, and creates uncertainty for businesses. On top of that, geopolitical conflicts in different parts of the world can cause sudden spikes in energy prices or disrupt key shipping routes, sending shockwaves through the entire global economy. Finally, there's the consumer. You and me. For the economy to grow, people need to be spending money. But with high inflation eating away at our purchasing power and concerns about the future, many people are cutting back. Consumer demand is fragile. If people get scared and stop spending, it can create a vicious cycle where businesses see lower sales, they start laying people off, and then people have even less money to spend. So when you put all these pieces together, high debt, stubborn inflation, trade wars, and weak consumer demand, you get a picture of a global economy that is walking a tightrope. It's not in crisis mode yet, but it wouldn't take much to push it off balance. This is why the conversation has become so heated. The system is more vulnerable than it has been in years. Given this vulnerability, what are the realistic scenarios for 2026? Let's break down three possible paths. The first and most likely scenario is what the IMF and OECD are currently forecasting: slow but positive growth. In this version of the future, the world economy avoids a recession. Inflation gradually comes down, central banks are able to start lowering interest rates, and we just muddle through. Growth won't be exciting. It might feel sluggish and stagnant, but the global system holds together. Job markets might soften a bit, but we avoid mass unemployment. This is the soft landing everyone is hoping for. It's the base case, the most probable outcome according to the big players. The second scenario is a mild recession. This could happen if one or two of those risks we talked about get worse. For example, imagine if trade tensions escalate dramatically, or if a new wave of inflation forces central banks to hike rates again unexpectedly. In this scenario, major economies like the US or the Eurozone could dip into a technical recession, meaning a couple of quarters of negative growth. Unemployment would rise and it would definitely feel like a tough time for a lot of people. However, it wouldn't be a full-blown global financial crisis. It would be a cyclical downturn, painful but manageable, and we would likely see a recovery within a year or so. The third and most alarming scenario is a full-blown crisis. This is the 2008 style collapse that the doom and gloom videos talk about. It's important to stress that this is a low probability scenario. It would require multiple things to go wrong all at once. Imagine a perfect storm. A major bank failing due to high debt, a geopolitical conflict causing a massive oil price shock, and a new trade war breaking out simultaneously. This combination of shocks could overwhelm the global financial system and trigger a deep, prolonged recession across the world. While it's unlikely, it's not impossible, and that's why it's called a high-impact risk. The consequences would be severe, so policymakers are working hard to prevent it. Now let's bring this down to a personal level. For most of us, the technical definition of a recession doesn't matter as much as what's happening in our own lives. The real issues are job security, our purchasing power, and our financial stability. Here's a critical point. Even without a global crisis, life can still feel like a crisis for many. If your wages aren't keeping up with inflation, your purchasing power is shrinking. You're getting poorer in real terms, even if you still have a job. If you're living in a developing country, a slowdown in the US or Europe can have a huge ripple effect. Foreign investment dries up, demand for exports falls, and local economies suffer. So the focus on a single date, 2026, and a single event, a collapse, misses the point. The bigger story is that we are entering a new economic era. The decades of low inflation, low interest rates, and increasing globalization are likely behind us. The new phase looks to be one of slower growth, higher risks, and greater uncertainty. So, what should we do? The right question isn't, will the world collapse in 2026? A better question is, are we, as individuals and as a society, prepared for a more fragile and unpredictable economic future? This means focusing on things we can control, building an emergency fund, paying down high-interest debt, investing in our skills to stay competitive in the job market, and diversifying our investments. It's about building personal resilience so that we can weather whatever comes our way, whether it's a mild slowdown or something more serious. To sum it all up, the idea of a guaranteed 2026 economic apocalypse is largely social media hype. The world's major financial institutions are not predicting it. What they are saying, however, is that the risks are real and rising. The global economy is vulnerable, and we are navigating a very narrow path to avoid a downturn. The most likely outcome is continued slow growth, but a mild recession is certainly possible if things go wrong. A full-blown crisis remains a low probability event. Ultimately, whether 2026 brings a slowdown, a recession, or something else entirely, one thing is clear: we need to adjust our expectations. The global economy is in a different place now. It's slower, riskier, and far more unpredictable. Being aware of this reality is the first step toward navigating it successfully. Thanks so much for watching. What are your thoughts on the economy for the next couple of years? Let me know in the comments below. And if you found this breakdown helpful, don't forget to like this video and subscribe for more deep dives into the topics that matter. See you next time.